Trading the foreign exchange market carries high risk and may not be suitable for all investors. Trading on margin, utilizing leverage can carry an even higher level of risk that can lead to a complete loss of investment funds. So before deciding to trade the foreign exchange market or using any of our software alert products, you should carefully and diligently consider your personal investment objectives, level of experience, and risk tolerance. There is a possibility that you could potentially sustain significant loss. You should not invest any capital or trade that you cannot afford to lose. It is your responsibility to be aware of and understand all risks associated with foreign exchange trading and to seek professional advice from an independent certified financial advisor if you have any doubts. Auvoria Prime does not exercise trading authority over your trades. You and you alone exercise discretionary trading authority over every trade.
US 30, bag entry, and money zone breakout. Nice. I'll look at US 30. Green, gunpowder green tea. Oh, I'm gonna have to look that up. Definitely, Daniel. Thank you. All right, you guys. So let's take a look at the charts. See what we can do in this hour. All right. So these were all these H1 alerts that appeared throughout the night, I guess. No, these were mostly yesterday. But these ones, 0 JPY, and those was what I was looking at. And then I got this new H4 alert on AUD USD. I'm not sure if I like that, honestly. Maybe I have to take a look. All right, so I might mention US 30. So you guys know this account that I'm on is my little itty bitty $100 account, and I'm trading this one. So this account can only do currencies in S&P. So I don't over leverage and blow the account. So I can't do US 30 on here. But I'm on US 30's chart on H1. So let me zoom out. I do not have my 200 on here. Let me throw my 200 on here. Boom, there you go. I'm like, where's my 200? Need that. All right, we're way away from the 200 on H1. So US 30 could be up here for a while. All right, so might mention bag entry. This was a nice one. Money zone breakout. Yes, here. Ooh, just did it, like within the last hour. So if you guys are up for London session, that's a money zone breakout. So here is the candle that actually closed and broke. So that's 4:20 a.m. All right. So that's 40 minutes ago, I guess. It broke out, it came down and kind of played around a little bit, and then it kind of took off. All right, so if you would have got in, here's the closure. It kind of had a gap here. I don't know if you could tell between it closed here and it opened here. That's a little itty bitty gap. But if you would have got in, spread probably would have put you up here. You would have had drawdown of about 80, 90 pips, and then shot up about 211 pips. Not bad. Money zone breakouts on US 30. I'm usually going for about 250 to 500 pips. So if I was still in this thing, I would be salty because I would be in drawdown again. Or maybe just take 100 pips and dip. It depends. 100 pips ain't bad on a breakout like that. So let's see. Taking a look at the Q&A real quick because I see something popped up. Hey Paresh, how you doing? What strat did I use to get into Euro GBP? That's an H1. That's an H1 trade off of the H1 yesterday. So I've been in there since yesterday, and it's in a downtrend. So why am I buying? Yes, it is in a downtrend, and I will go over why I'm buying. I'm taking a chance because of what I saw on the chart, and I'll tell you in a second. I'm okay. just getting over being sick still, and now multiple people in my family are sick, so that's another reason why I can't be on the calls too long lately. We're all recovering, me and the kiddos. So that's a nice little breakout. Good shout out to you, Mike. 100 pip and dip might be nice on these breakouts though. So just on US 30. On NASDAQ, maybe go for like 50 pip and dip, and on S&P, 20 pip and dip is what I'm thinking on money zone breakouts. Because they're not really there for you to take a long trade. It's there for you to just get in and get out. Let me see. We're gonna go to Euro GBP. Thank you. I appreciate that, Paresh. Much love to you. All right, so looking at that, this is why I'm in Euro GBP, by the way. So let me zoom out. It was an H1 trade. So here's the H1 alert right here. Yesterday, yeah, like I think this is Tuesday night is when I got it. Yeah, this is Tuesday night. So I got an edge right here, pretty much, you can see. Yeah, I was in all that drawdown yesterday. It didn't matter to me. The reason being, yes, it's in a downtrend, but a couple of things you want to look at that I saw. Really, somebody brought it to my attention. They asked me to take a look at Euro GBP, and I was looking at it and I said, "Ooh, this is on a massive downtrend." But I went to the higher time frames. So this is me looking at it on the H1, got the AIRO alert, and normally I don't trade against the trend, but what I saw when I zoomed out, like you can see here, we've been on a massive downtrend for like the longest time, and then you had this beautiful correction up for a couple of days, all right, and then it restarted its downtrend again. However, when I see something like this, I see like, you guys can Google this, peak formation highs and peak formation lows, okay? Which studying Nate's market maker method, it kind of just gives you inclinations on when trend might be about to change based on how the market makers are moving. And I see, and usually they're for days on end. And so I saw this move, big move, and here's my high formed. And I'm like, okay, that's a really nice high. So I'm gonna mark that off. Really nice high. And then we have the drop down, severe drop, right? And then it kind of stalls right here, forms a new level of support. And you could tell it forms like a new level of support here. Well, not new. See that area here is kind of supported. So kind of formed there, bounced off of it, went back up again with a retracement, and then dropped again, broke it, came on down. With that, I said, okay, beautiful, beautiful peak formation high formed, and then we have multiple days of this drop. And then I saw this very low here where you see my stop loss. This candle right here. I adore. I used to be scared of wicks. Now I'm not scared of wicks anymore. I adore candlestick formations with a wick now, and extremely long shadow wicks too. Meaning, it's because it shows exhaustion. It shows exhaustion. It also shows strength, who's in charge pretty much, and who's pushing harder. So in this candle, even though this is a bearish candle, right? It came all the way down, and then the bulls were like, no, we're not going down anymore. You're going back up. And they pushed it all the way back up again, forming this extremely long wick. When I see wick like that, that makes me pay attention that trend possibly could be changing. I'm not for sure or guarantee that it is, but it could be possible. Now, when that wick formed, the support zone isn't there. All right. But when that wick formed, you can kind of, is the word, think that a zone, like a supply or demand zone has been formed pretty much. And this will be a level of demand. So a level of demand kind of formed and it kind of took off. And as it took off, that's when we got this H1 alert. So I was looking at it Tuesday afternoon and I said, okay, I'm not sure if it's going to come back or if it's going to break through, whatever we wanted to do. But then later on, I saw we got the H1 alert. I said, okay, momentum was on my side for the buy. And so I said, all right, that might be the time to get in. With all that being said, I went to my higher time frames. Always look at your higher time frames. Lower time frames is for scalping, and it's kind of what price action is doing in the immediate, but higher time frames are king. All right, they dominate. They're telling you where your trend is doing. So you need to look at your candlestick formations on the higher time frames as well. So I went to the H4. You guys already know I love H1. I trade off of the H1, but I look at the H4. And then looking in the H4, well, of course, we're on a downtrend. Absolutely. Beautiful, beautiful downtrend for many, many months. However, I'm looking at my high, low, high, low, and now we're moving back again. And that same wick off the H1 looks like it's a little stronger wick here, even on the H4, and then, the push up. And we got another pull back down, but then what did it do? It pushed up again. And what is it forming? Higher lows. Higher lows, okay? Telling me we're going back up. That's another thing I looked at, and I saw that. And then, of course, here's the daily chart, which is okay, but really what got me was this weekly chart right here. And the fact that I'm sitting in the support zone, which is also a demand zone. So I said, oh, okay. You took all these weeks to get back here. You came up. Look at this institutional candle. You came up. You kind of hovered around a little bit, came back down, retesting the zone. And then I got rejections happening, and you might be coming out of this zone. Really, really good opportunity to buy. So that is why I took the buy on Euro GBP yesterday. Now, yesterday I was saying that these could be, not all the time are you in a swing trade where it's going to be like days on end, but I feel like I got into this trade really, really early. I'm going to be in here for days on end until it hits what my TP and what I'm looking for. So that's why I'm in the Euro GBP trade. So yeah, it's a counter trend trade for the long term. So I didn't necessarily go by what I see on the H1 time frame. I went off of what I saw overall, what's going on with the pair that made me choose to take it as a swing versus like a day trade or a scalp. So hopefully that helped. And it's actually really nice. I just got another institutional candle push up. So I like that. I like that a lot. This down arrow doesn't even matter. As long as it don't come anywhere near my stop loss, I'm perfectly fine with it. And this pretty much, if on the H1, what you're seeing now, this is ranging, it's consolidating. It's bouncing between these two zones, right? So what's going to happen? It needs to break out somehow. It's either going to break out to the bottom, hit my stop loss, or it's going to break out to the top and restart. I'm of the inclination that it's going to break out to the upside because of all the things I just went over. So that's the only reason why. Hopefully that helps. All right, so nothing in the chat, nothing in the Q&A. That was Euro GBP. I'm going to be in there for a minute. And let's go take a look at this AUD USD H4 alert. Okay, so that same institutional candle that happened yesterday with the indices, these all took it as well. If I remember yesterday, I think that's when the Senate passed something about infrastructure, which caused it. I didn't know at the time, but that helped me hit my TP on S&P yesterday, so I wasn't crying about it. H4 alert. So let's take a look. Of course, we're in the downtrend. Of course. I want y'all to pay attention to something too, by the way. Um, gold. Gold and AUD USD highly correlated positively, meaning that you can look at a gold chart and you can kind of lay it on top of AUD USD and it can kind of follow the same pattern. Similarly, AUD USD and gold is more correlated than Euro USD and gold. All right, just wanted to throw that out there. You guys can Google it and confirm it if you don't believe me, but that's what it is. And also, though, but Euro USD, which Nate and I both agree can't stand that pair. We call it no name. But Euro USD and AUD USD move similarly in the same direction. All right. So what do you guys see here on this H4 chart? Look at this ranging that's happening. Look at this. Okay, all that right there. You got to break out somehow, some way, right? Even off of this downtrend, it got to break out. What does this mean? They're gathering money, gathering all these orders, gathering all this money, and they're going to do what? Break somewhere. And I'm thinking it's going to break to the upside. Okay, take a look at the weekly. See how it's coming down. It hasn't really touched the zone yet. Let's look at the daily. But I'm sitting on a zone on a daily. All right, I feel like it's going to break to the upside. Especially look at that AIRO MA so close. Yeah, really, really close. Okay, so this H4 alert, I'm not necessarily going to get in it right now. I'm not really feeling like it's time yet, but I'm going to look at this H1. I don't feel like it's time yet. A couple of reasons why. Remember I just said about peak formation highs and peak formation lows. So similar to the Euro GBP, I feel like this is a peak formation high up here. And then possibly this is the peak formation low right here, signifying that yes, we could be on a trend change going back up. All right. But that darn institutional candle yesterday kind of threw things off a little bit. So I feel like it needs to correct itself and then maybe continue going back up, which is why you got that H4 alert. You got momentum on your side, but I ain't ready for it yet. I'm not feeling confident yet on AUD to go back up. I feel like it needs to do something else. But what I want to bring to that attention though is where's gold? Here's gold. And I want y'all to see what does gold look like. And always got to throw my 200 on there because I just want to see where price is. Look at where my 200 is off the H1. It's like acting like a little magnet, pulling it up, right? Here's the H4 on gold. And that H4 looks like we had a beautiful range. And then it broke out and it broke out to the downside. But look at this wick right here. Yesterday's or today's daily candle wick. Massive rejection here. Well, that's not this week. This is 686. This is the beginning of the week, sorry. Massive rejection off this H4 candle. That right there, I wish I would have seen this earlier. That right there tells me things are about to change on gold, as you can see, and it's turning around. Now, this is on 8.6, so let's go to the H1. I believe this is that candle. No, it's 8.9. Where's that rejection candle? Yeah, it has to be this thing. And then it goes all the way back up again. Let me zoom in. I'm just trying to see where that, yeah, there it go. Look at that massive thing drop and then turn around and go up. That's where that rejection came from, this. So with that, that's a beautiful move here with this massive, like that's like a rinse pretty much. And then they're going to turn around and start pushing it back up. And then what you're seeing, it came back down. Look at this. This is like a stair step now. came up, drop, step up, probably do another drop, step up, and it's just going to kind of stair step its way back up. That's looking at gold and looking at AUD USD at the same time. So 8.6 kind of did the same, but now it's starting to stair step. Here's the step 1, here's step 2, and this is possibly step 3, and then keep going. So I'm cautious on AUD USD. Plus, it's such a slow moving pair. It'll take forever to get where I need to be. It's slower than Euro GBP, by the way. And Euro GBP is a slow moving pair too. It doesn't move a lot in a day, but it's worth more. It's worth more. A standard lot is worth more than $10 per pip. That's why I like it. Go for the big bucks. But yeah, that's how you would look at an H4 alert, even though it's an up arrow alert and it's against the trend. It's a possibility that it is still a good trade. I just personally ain't gonna take it right now, but I keep it in mind if I see something else. So if there are any questions, someone got me for like another half an hour. I'm just gonna see what's going on with those. I'll leave it on gold. I'll tell you what, when that arrow MA crosses 200, gold gonna go bye-bye. Back to the top side. Where is it at on the daily? Ooh, look at that. This right here, you guys. Look at this. These wicks are important. I don't really trade gold like that, so that's why I didn't see it. But these wicks are important. A massive rejection wick off of a support zone all day is a go. You know, all day is a go for a buy. All day. Especially one that looks like that. Oh gosh. Hurts my heart real just looking at it. And let's see, how many pips is that now that I can see it off the daily? So let's see, you would have got in next day right here. So maybe spread would have had you here. You would have had like 154 pips drawdown, 254 pips up right now, and let it just keep going. That's a swing trade all day. People are probably sitting in this for days. Wow. Okay. That's awesome. And check it out. This looks like a rejection off of a support zone and an order block. Right there. See that? So what I'm saying to you guys is pick a pair, study it, master it, specialize in it. I think I mentioned this before. I see there's Q&As. I'm going to definitely take a look. I personally run the 3 US indices, right? Those are just my thing. And that's because I like the volatility of them. I like to be in and out. I like to take one trade a week and make my pips and dip, and I don't have to worry about it no more. And the US indices give that to me faster than what I would sitting here waiting on a currency pair. That's just my preference. S&P is my favorite because it is a little more stable like a currency pair, but it has enough volatility to give me the pips that I need in a week that a currency pair couldn't give me. So that's why I like S&P. Of course, US 30 and NAS are just more volatile, but they catch more pips, and make more money with those. With that all being said, the same techniques and strategies that we're going over on these calls can be applied to anything. So I'm looking at gold right now, and what you saw I just told y'all about rejections off of these shadow wicks, long shadows. And I saw that this was a rejection off of a zone, powerful, but it's also confluences, multiple confluences in a trade is what you need to be able to be confident in your trade to take it, okay? Multiple confluences, meaning what other parts do you see besides an AIRO alert that will tell you that this trade is good to go? Because remember, we all know not every AIRO alert is good, right? Like right here, you see like 4 or 5 of them. How would you know which one to take, right? You need additional confluences. So in this instance, I will be in a trade before an AIRO alert on the daily chart. Why? Because I got a long shadow rejection. 1, rejection off of a support zone. 2, okay, rejection off of a support zone off of an order block. 3, here's your order block right here. Remember, order blocks, last bearish candle before the uptrend. Boom. That's powerful, that order block. All right, before the move. That right there, 3 confluences. If you were watching gold, tells you, boom, go for the buy and be just chilling. Pip and dip if you want, or you can catch it as a swing. Depends. You see what I'm saying? So those are things that I'm just telling y'all to look for when you look for trades, especially if you're getting in before an AIRO alert. And the AIRO alert just helps you signify you got momentum in your favor and you can maybe take another position. But that's now that you see it, those are the type of setups that you look for. Those are the type of setups that I look for. You know, I look for those off of the H1, off of the H4 and the daily. I like those because even though I might be in the trade for like a day or two, I'm catching mad pips. This is a 1, 2, 3 day trade. That's over 250 pips so far. And it got potential to keep going. So, all right. So I went through that little spiel. Let me check the Q&A. Hey, Danielle, do I mind going quickly how to input the Fibo with the... Oh, yeah, sure. Absolutely. I got you. H1 and... Hey, Grace, how's it doing? Glad to have you here, darling. Oh, yeah, S&P off the H1. Yeah, that was beautiful. So, funny story yesterday. You guys know we got into the trade yesterday off of the H1 because of this rejection right here, right? You see that? And I'm gonna go over it, Daniela, for you real quick. Matter of fact, here's the fib. Fib retracement, it doesn't matter. That's what I'm using. So fib retracement, I'm just gonna draw a fib real quick. Low, high, and you guys want to know about the price numbers on the fib levels. So what you do is on the fib, right click, objects, find my fib, here, edit. It's this percentage sign, dollar sign. That's how you get the amount, the price level on your fib. So I just put in the description. So I typed in what fib level it is. I put this minus in here, and that's just for me, or hyphen, space, and then percentage, dollar sign. That's how you get and then hit OK. That's how you get the price on the fib levels lines. And this is helpful to me if I want to set pending orders and stuff. All right. So that's that one. So yeah, off the H1. So this is powerful. I mean, it was actually nice what happened yesterday. I wasn't anticipating this institutional candle that happened that made me hit my TP yesterday, but hey, I'll take it. So what I was telling everybody yesterday was, remember this H1 alert happened on S&P, and you would have took it, you would have caught like 125 pips, right? Remember, I'm telling y'all, based on how you are using your accounts or whatever, this is what I do. I follow a compound plan or a trading plan pretty much. I've done it a couple of times now where I have $100 and you take it to about 15K or something, 20K or something like that in a year. And basically what you're doing is you take that amount of money to build you up a trading account so that you can live off of. Okay. And then once you do it, the goal is generate about 2,500 a week, right? Based off of your lot size. All right, so off a 20K account, you're going anywhere from a standard and a half to maybe 3 standards, depending on what you're trading. Normally, if you're going for like 75 pips in a week, because that's what I usually did, right? 15 pips per day, 75 pips in a week. That's all you need to live your life, okay? Currency pairs. Indices, though, I noticed I needed to take more pips in a week to lower the lot size so I'm not over leveraging the account to the point where if I do take a loss, I don't have to have such a devastating loss and try and recoup it later on. So with that, now I go for 125 pips in a week instead of 75. And that's what I've been using, and that's on S&P. All right. And that's if you don't have a 3 for free to cover your AIRO subscription, right? So that's if you have it. So if you don't have to worry about your AIRO subscription, 125 pips a week, you're good. Follow the plan. That's what I've been doing. I'm living off of that. You're good. And that's like one trade. And I just showed y'all one trade, S&P. Easy from $100. Now, showed y'all yesterday, though, we got into this trade off of what? This rejection right here. I saw that rejection yesterday. Yeah, 5 a.m. This is a 5 a.m. candle. It was rejecting. This is 6 a.m. I got into the trade based off of the price action at the time. So I said, hey, there's a rejection happening here. I like it. Matter of fact, this is the rejection. And then this candle, I said I didn't like it because it acted like it didn't know what it wanted to do. And then during the 5 a.m. part, this was happening. I said, oh, this is rejecting. It's turning bullish. I'm going to hop in this for the buy. And that's what I did. I waited on the M1 to see where there was an opportunity to get in, and then I got in. I was in about 20 pips drawdown. And I went to sleep, actually. Set my stop loss and set my TP. Because remember, I said I was going to the zone. The zone was up here. Remember that? So I set my stop loss, I set my TP, and then I went to bed, took a nap, woke up in profit. This candle happened. All right. But remember, when I took the trade, it was based off of a fib level breakout. Okay. And I said, if you just want to catch 20 pips, you just go to the next fib level and you be done. But I said, I see it going to the zone. So you either caught 20 pips or 80 pips. It didn't matter. You would have made pips yesterday. Point I'm trying to make is 20 pips out of 125 in a week, you would have got it. All right. Or 80 pips out of 125 pips in a week, you would have got it. All right. So if you would have took both trades, you would have been over 200 pips in a week. You don't need it, but I'm just telling y'all there's ways to get it. And that's off of S&P alone, off a $100 account. Right. So look at this H1 AIRO alert, though. Now, when you got it, it's a bounce, arrow, go. You are following the trend, right? And if you would have got in right here, you would have been like, oh, okay, I'm catching it. Spread would have probably put you here, would have took you up. You would have made 60 pips. I would not have been cool with that because normally on H1 trades, I'm going for over 100 pips on S&P. However, it was Wednesday, and it was based off of an institutional candle. Be wary of those. Be wary of those. Institutional candles are great because it helped me hit my TP, but me trying to get in after one, I'm a little wary of those. Okay, be very wary of them, and just wait for some pullbacks, like what it just did. And then you see, it hasn't broken that high since. It's stuttering, right? So I would be cautious of S&P right now. It's riding this AIRO MA though. It's riding it. So it could very well break through the zone here. And so I'm gonna mark off the money zone. This is the money zone of S&P right now. Let's zoom out. It ain't got that much to do to get there. It's only 30 pips away. Pretty much, right? It's only about 30 pips away. So how much did S&P do today, actually? Let me see. This is the opening candle. Opening candles right here. Went about 38 pips down so far. Highest today has been is about 31. So it needs to make a break somehow. So it's either going to break down, it's going to break up. More than likely, break up. If it breaks up, it crosses money zone, this H1 zone is going to be gone. So keep an eye out for it. You got bullish candlestick formations happening here. So you check it out. You got this bullish engulfing candle. Nice. The next candle was also bullish. Nice. Sitting up in this resistance zone. It's okay. It could pull back. This is not the time of day the S&P to really be making their moves. It makes its moves what? During New York session, right? So things could be setting up. I'm going to say this though. Looking at this, you're going to probably see a pullback and then maybe a shoot up. I'm just saying. That's what I'm looking at right now. But I want y'all to pay attention when you're looking at these. Look at the higher time frame. Let's go to the daily. Look at this beautiful daily. My zigzag. We got it going here. We had these indecisions, and then it turned bullish. And look at this current daily candle. It's not really an indecision yet because the day hasn't really started for S&P yet. But it's turning bullish, and we're forming what? Higher lows, right? Forming higher highs, higher lows. Still uptrend. Okay? Highest it's ever been. But always look for the pullback and then try and get in. So daily looking good. Here's the H4. Ooh, beautiful. Look at this current H4 candle. Current H4 candle is bullish, engulfing. It's looking nice. I really don't want no wick at the top though. I hate it when it off the H4. I don't like it like that. I like it clean. I want it clean. And the reason being is look at this previous H4 candle. See how you can't just always just take a trade off of it, whether it's engulfing or not? Take a look. This one is bullish engulfing of this as well. But then what happened? The next candle, it dropped. So need additional confluences before you just take a trade based off a candlestick formation. Okay? Those are always things I want to tell people, but this is looking nice. I like this. The new H4 candle starts at 6 o'clock, so in 20 minutes. So what I'm looking at is I'm looking at this current H4 candle. Yeah, we got some movement. Okay, good. Now it's turning bullish. I'm thinking at 6 o'clock, not only the new H1 candle starts, the new H4 candle starts at 6 o'clock. I'm looking for that to still remain bullish. If it remains bullish, okay, if it remains bullish, the 6 o'clock comes and this thing remains bullish, that tells me I'm going to have lots more momentum in my favor to come in here and push and hit this money zone. And it would be beautiful it does it around 6, 7 o'clock. So that way, usually what happens is around 6, 7 o'clock, if it wants to push, then you maybe have some news drop around 8, 8:30 that can help it momentum-wise keep going and let it push through before market open. That way you ain't got to worry about it. That way you're so far in profit that when market does open and if it wants to do that nice little pullback that it always does, it either pull back, like you know how when 9:30 comes and you're in a buy and you're in profit, and then what happens is that market open and it starts to sell on you and you're like, oh, come on. You're like 20 pips away from your TP. It happens every single time, right? You just don't know what side of the market are you on when it opens. You try to be on the right side. So what I'm saying is that it would be nice to be in there now and be on the right side of it and let market open push in your favor. That's all I'm trying to say, which is what happened yesterday for me. That wasn't market open though. This is 8 o'clock candle. So it was 9 o'clock when it ended. But the 8 o'clock candle happened. So that's what I'm looking at on S&P right now. Let me look at the Q&A. You're welcome, darling Daniela, anytime. So I like it. This rejection off of this H1 zone. I'm not going to be too worried about it. Honestly, it would just be for me. If I want to take a buy, it would be for the benefits for me. Just let it reject off the zone. Shoot, I want it to reject and let it come bounce off this AIRO alert. This AIRO MA, honestly, and then hop in. And that would be even better because why? It's already made a high of the day so far. Remember, high of the days during London session off of S&P or any of the U.S. indices. I take it as it will. But I want it to drop, let it drop, and let it form a low of the day with a bounce off the arrow in May and give me a bullish candlestick formation. Buy all day. That's what I'm kind of looking for. It would be nice. And it's not that big of a drop either for S&P. That's the thing. From where it's at right now to where this is, that's only 50 pips. That's a $5 move. That's nothing. I'll miss those 50 pips to go turn around and catch 200. You know what I mean? So that's what I'm also looking for when I'm looking at setups, is that I don't always try and just jump in and catch it. I'm looking for a setup specifically that meets criteria, because I'm looking for quality trades. And let's just go. Now, but yeah, always be wary of these H1 candles off of these institutional ones. I don't like them at all. But that's it. Let me check out the Q&A. What you got? Thoughts on US 30? Same, David, same. And you probably like, how you gonna say that? Same. I'm saying that same because the US 30's been more bullish than anything. I want y'all to look at this H1 alert from Tuesday. Same day. Remember S&P, NAS, all of them gave us H1 alerts. Well, NAS gave it to us on Monday. S&P and US 30 gave it to us on Tuesday. Bounce, arrow, go. Look at this. Look at this. This is thousands of pips. Look at this. I mean, come on. Um, I missed that one. I'm mad. I missed that one. I was on NAS and I was on S&P. I missed this one. Also, I'm sick. I'm taking that. I'm going to take that cop out. I'm sick. I missed it. But this is why I love H1. Now, again, H1, same thing. You got to be careful when you get in off of H1 alert on US 30. Because I'm going to tell you right now, you get in right here. I'm always a little bit above opening because of spread. You get in right here. Where's your stop loss at? You got to look at it. When not only you going to always look at the profit that these things give you got to look at your stop loss. Where your stop loss at? Right here, if I'm looking at this, my stop loss would be the zone. That right there to the zone is 1,353 pips. On a 0.01, that's $135.34. So if you want a $100 account, that's why I sell you on a $100 account. You can't trade US 30. 300, 500, that's like dang near half the account almost. Okay? With the potential to do double that, but you always got to take your trades and consider your loss, not what you're going to make. Okay? So always be careful, but that's a beautiful thing. I mean, over 2,300 pips so far and still going. I love it. Love it, love it, love it. But same thing on US 30. I mean, it's on a bullish intent. Check out the daily. It's the highest it's ever been. You know, this thing can keep going. You know, we're in no man's land on these indices. All right. That's pretty much. Oh, goodness. Look at this H4 candle. Ooh, that look beautiful. Look at the doji right here. Look at the doji. And I know you probably guys, first of all, I'm going to just tell y'all, I really don't care about candlestick names. I'm just learning them because that's what a lot of people asking me. And I figured I might as well just learn these candlestick names. But I don't want y'all to pay attention to the candlestick name. Pay attention to the strength of the candle. I mentioned this on a call a couple of weeks back, and then actually shout out to John, who posted a nice picture about candlestick strengths as well. What you want to always look at when you look at a candle, no matter what time frame it is, how strong in the direction is this candle? This is a bullish candle. It's bullish because it's green. All right. But also, you know, if you took off the trend color, it would be a bullish candle because the opening is higher than the closing, or a little bit higher to it. This is a bullish candle, right? And in this bullish candle, look at what happened. It went up, it came down, it went down, and then it came up. The bulls thought they were in charge, but then the bears say, we ain't going up yet. Push it back down. This is a weak bullish candle. It's weak. It means, and then what happens at the end? They fought so much it didn't even know which way it wanted to go. It kind of went flat, right? Then the next candle, the bull said, we're in charge. Let's go. Now, also, it's the time of day too, so that might also play a factor. But look at where you see the money, where the money's moving in the money zone, right? This is US 30. Of course, it's going to be moving in the money zone. Of course, it's going to move in this. This is New York, right? This is New York. 6 o'clock candle, which is about to start in 10 minutes. 6 to 10, 10 to 2, 2 to 6, right? All that movement takes place during there. Money zone. That's why the money zone is so important. But I like this candle right here, boy. This thing looking all bullish and thick and nice and beautiful. I like this. I like US 30 to the upside, okay? I'm looking at the daily. Look at that. Daily done broke this right here. It already broke the high the previous day, which we all know because it was a money zone breakout. Bullish. I'm loving US 30 right now. Here's the H1. It ain't even got no zone. Now, this is what I want y'all to take a look at for US 30 going forward, though, today. What I'm going to be looking at for US 30 is I'm going to be looking for a pullback. I'm going to be looking for a pullback. And this is why. Because I want to get into this trade. I want to get in. I want to get in for the buy. But I'm going to be looking for the pullback and see what happens on this. Especially with this institutional candle right here. Yesterday, of course, which all of them did. Okay. I just want to make sure there is no... That's an imbalance like a mug. I'm looking for a pullback. I feel like it needs to pull back. Let me see. Look at this. That. And this. Kind of came down and cleared a little bit. I feel like it needs to come down and kind of clear some of this. So I'm going to be kind of looking for a pullback around here. And then jump in for the buy. But it's Thursday too, so I'm really wary about jumping in on anything on these indices toward the end of the week. I'd rather just restart next week. Restart for the same setup like this next week. That's all I'm looking for is setups, optimal setups off of the H1, H4, and daily. And then go live my life. Whatever happens on the M5, that's great. If you want to scout, here's the M5 right here. Look for those breakouts on the M5, pip and dip. But usually by the time I wake up or I get in, I'm looking for whatever's happening on the H1. But yeah, so that's my thoughts. Yep, that's what it was. Definitely David, a correction for sure. But look at it. Look at how it did this and then it broke out. You see this move right here? This is all the H1, but I'm gonna make it. Look at this right here. That stuff. This right here. And then what did it do? Breakout. And then took off. So it might be gone for a while. But US 30 does this mess all the time. See, here it is again. I just saw it. Here I go again. See? Look at that. Rectangle breakout. What? Breakout? Gone. It does it all the time. Here's another one. Boom. I see it right here. This is a little longer, but check it out. And all that consolidation, breakout. Now, what happened? Why this didn't take off? Because it's a support zone here. Right? Took off, went bounce, and then went. This is beautiful, though. Check this out, though. This is beautiful because this is Monday night, and then this is Tuesday. This is beautiful because I like it. All this accumulation that was happening right here with the fake out infos, and then boom, take off. Ooh, lovely. That 200 right there, I would not have gotten into any sales off of this because we're in an uptrend. But also until that thing would have broke below that 200, then I would have been looking for sales. But because that 200 was right there, it didn't even touch it. It said, nope, we turning around and we're going. This was nothing but a fake out. This is for people that was thinking that they were going to sell. And they said, no, we're not doing that. Take your money and run. That's what they did. Beautiful. Every single time. US 30 loves doing these rectangle breakouts. It's just kind of hard to see it when when the candles are forming, but that's why I'm always on the H1, and that's why I kind of only look at it a couple of times in a day, you know, because I don't need to be on a chart all day if I'm looking at the H1. What for? I'm only looking for a setup, and it took all these hours in order for that to set up, so you're kind of just looking at it that way. So correction, maybe. Hey, Brockery. All right, so y'all got me for 4 more minutes, and then I'm gonna need to take a nap. I'm getting tired. Any other questions y'all want to go over? So yeah, I'm in GBP, Euro GBP forever. It looks like. Ooh, the order block off of the daily on gold. That's just a beautiful setup, and that just goes back to my thought processes on pick a pair to specialize in instead of being a generalist over all pairs. Pick like 2 to 3 pairs that you want to specialize in and focus in on those pairs and take the strategies that you're using with AIRO and apply them to those pairs so that you start to learn how to look at the chart on how that pair moves. All right, if you want to do order blocks, you need to look at the pairs that you want to focus on and start marking up order blocks so you could see when you see an order block, when you see the move away from it, and when you see the retest of it and the rejection to go in again so you don't miss trades. You know what I'm saying? I would highly suggest. Here's NASDAQ, by the way. I'm gonna tell y'all right now, NASDAQ is the little brother, the middle brother of the 3 indices, and it does what it wants to do. Like that melt, I was in that melt the other day. I missed all of this mess yesterday. I missed all of that, and I'm glad because it did not know what it wanted to do today. I couldn't have not predicted this at all. I wouldn't have been able to trade this yesterday. The H1 looking weird like that. I'm looking at the H1. Only thing I would have saw was I don't like this angle. This is what really messed me up yesterday. Remember I told y'all I was feeling salty because I thought we was in for the buy with the rejection, and then they played me with the drop. I was like, that mess. I ain't like that at all. But I caught the drop, as y'all well know. But I ain't like it. I got played. So then I'm like mad at Nas right now. And then it dropped even more. It just kept going. And look what the AIRO MA did. Crossed below it, which was what that massive drop yesterday was. I didn't like none of this. Now, though, we're still on an uptrend. It ain't strong enough. It just formed this support. Now, though, taking a look at the NAS right now. I got this right here. It's not a massive rejection, so I'm a little wary of this candlestick formation right here, even though it's turning bullish, and it might give me a upward arrow going in, which would be a bounce arrow go. I would be cautious because it's below the 200. Okay, it's below the 200. So I still got pressure to the downside. So I would be very, very cautious of that. All right. Let me check the chat, what we got. Hey Mel. Oh man, good to see you. I'm about to get off, bruh. Hey Julian. I am about to get off, y'all. But GVP off for the short on the M15. It is 6 o'clock. I'm about to get off, but let me take a look and then I'm gonna go take a nap. Let me see. Well, somebody just added for a GBP odd for the short, but it gave me a buy signal on the H1. Let me take a look. What y'all got? Ew, ranging. Staying away. I would not. I would not. It gave you a buy. So there's a short, and then it gave you a buy. It's ranging. Stay away. It could be pushing up though. What are we on? We're on a downtrend. I'm at the H1 say. H1 say we on an uptrend. So, Mel, you so funny. I'm gonna catch you to next week. I'm only doing hour calls this week, but I'm gonna leave y'all with this. Look at GR. H1 says an uptrend, M15 says a downtrend. What do you do? I'll tell you what you do. You draw your fib. That's what you do. Fib retracement. Look at that rejection. Gosh, pay attention to these candles, y'all. Look at that rejection off a support zone. We are going up. Going up. I'm sorry, I get so excited when I see these. Those look beautiful. Here's the same thing, even off of a sell. Look at the rejection. We're going down. Beautiful. But anyway, what am I going to do with GR right now? Low, high. That's what you're going to do. And you're going to see how far back did it pull back? 38.2. And then it pushed up. Is it going to keep pushing up? Don't know. But you're going to take a look and see. To your benefit, it will push up more if it breaks above that 0 and keeps going. All right? That's what I would look at. So I would not be messing with GR until it decides what it wants to do out of this ranging that it's doing. All right? That's what I would do from off the H1 from what you see on the M15. M15, when it pulled back, is just meaning that it's pulling back from the overall higher trend. Okay? That's why it's in a downtrend right now, because it was just a pullback. Now, and see, you just had this up down. I would stay away from it. It's not making a decision yet. Okay. That's me personally. I don't even like the M15 like that though. So M15 is price action. It could change so much. I prefer H1. But that's my thought on that. Q&A. There we go. I know, right, Daniela? I'm loving these hour calls. Real quick. I'm going through the chat. We already talked about US 30, Daniela, right? Yeah, I think we did. Raj. Sorry, Julian. Oh, you poor thing. NZD USD. A buy. Oh, thanks, Mel. NZD USD. I do not like that pair. I'm just going to tell y'all straight up. NZD USD. I don't even have it on my list. I don't like that pair at all. Some pairs just don't move according to my liking. Some pairs just don't, and that's one of them. I'll look at it for you, but it's coming right off my chart. Oh, it's on there, so let me see, where's it at? I don't see my NZD USD somewhere. That's weird. There it is, way at the bottom. Oh, yeah, I know. But my call will be there next week, 5 a.m., 5 to 6. That's when I'll be on. If I feel better, anyway. I'm starting to lose energy now. NZD USD off of the daily. That's very similar to AUD USD. Rejections. Got push up. What is it pushing up off of? This here? Interesting. So far, so good. Look at the H4. Ooh, look at that rejection off of the AIRO MA. I like that. That's nice. How many zones we got? Ugh, it's on a downtrend on the H4. I would be wary of this. Even though you're on an overall uptrend, I would be wary of it because price action is going against you on the lower time frames. be wary. You're just gonna be in. If you're gonna take it off the daily, you're gonna be in it for a while, I would say, because you need all the lower time frames to start turning bullish in order for it to move the daily the way you want it to. That's what I would say. Even though it's turning that way, but just check it. Like, look at this one. You see, this is off of the H1 on NZD/USD, and it hasn't even pushed up as much yet. It needs to break those. So I would be cautious. I would be cautious of anything. It's turning your way though, but that's definitely a swing. So if you're gonna catch it, just be in it for a minute. But I would say also before I go, look, what's your stop loss? Because I'm gonna just tell you right off the bat. I'm looking at this. My stop loss right now is the zone, support zone. That's 120 pips to possibly make 230 if it makes its way there. But this is off of the daily chart. This is in these period separators are months, so it might take you a month to get back up there. Just to let you know, that's my thought. Okay, Laj, what was it? Last question. US 30 pair sell and buy on one click trade R0. It has been happening a lot. Do you know how to fix it? No, Raj, you're gonna have to send me a screenshot or of what you're talking about. You're saying the trade R00 like here? Is that what you're saying? Or are you saying like right here? Send me a screenshot of what it is you're talking about, and then maybe I could take a look at it. But other than that, I think that is it. Cool, Raj. I'm gonna go take a nap. So I'll answer you later. But because I gotta go try and take a quick nap before all the kids wake up so I can get some energy again. But that's it today, y'all. Sorry I didn't really take a trade, but like I said, everything kind of made its move and they kind of setting up. So, and you know I ain't finna take no trade and lose no money. But I'm glad I got a chance to talk with you guys. I kind of like these hour calls, so I might stick to just doing an hour. And I will talk with you guys next week. If I see anything, I will drop it in the chat. Raj, don't forget to DM me. Julian, sorry you missed the call, but I will be on here next week, 5 a.m. to 6 a.m. as long as I'm still healthy. I know, I know. But this call was recorded, so, and it was on there yesterday quick, so hopefully you guys will catch it today. And get used to these H1 trades, y'all. Don't sleep on them. Remember, you do not need to trade every single day. Just have a trading plan in mind. Just have a certain amount of pips to catch and catch those pips. And then I suggest specializing and not generalizing. Pick 2 to 3 pairs that you want to specialize in. Learn those pairs inside and out. If GBP odd is going to be your pair, let that be your pair. Okay? You guys, take care. Be safe. Yes. And I will talk to you guys soon. Bye.